Virtually at the low point of the day for all the frontline indices, and that's led lower by the HDFC triplets. HDFC Bank, HDFC Limited, both of them have a higher weight, and as a result of which we're seeing some decline in HDFC Life as well. So all these stocks lower in today's trading session, in fact at the low point as we speak. So good time to get in the F&O perspective, F&O side of things which are taking place in the market. We're currently at the low point of trade, but from the highs of today's trading session, we've seen a near 150-point correction. In fact, if you just take a look at the highs of today's trading session and the 20-day moving average, so that's telling you levels upwards of 18,050 might see some sort of resistance on a technical standpoint as well, because the 20-day moving average is placed at around 18,077, and this, remember, is a falling 20-day moving average, so it will converge at lower levels. The indices that I'm watching in focus, it's the Nifty IT as well as the Nifty Bank. It's been a stealth outperformer this month so far. In fact, if you just take a look at the Nifty Bank, it's down about 1.5% this month, and that's including today's cut, whereas the Nifty IT index is up around 2.3 odd percent. This was a complete reversal of what we saw in the previous year, 2022. The IT index was down 25%, whereas the Nifty Bank was up by around 15 to 20 odd percent itself. What are the active options that we're watching out for? Since we're below that 18,000 mark, the 18,000 call writers are extremely active. Levels upwards of 18,000 are seeing a lot of resistance. So almost a crore shares added in open interest to the 18,000 call for a premium of 60 rupees, telling you that levels upwards of 1850, which is today's high, will see a fair amount of resistance. 18,000 put writers too have been active. Those who are writing both the 18,000 call as well as the 18,000 put together are playing for a premium of 200 rupees, telling you that the broad range would be 17,800 at the lower end to about 18,200 at the upper end itself. Does that tie in with the technicals? Ruchit Jain joins in. Ruchit, your thoughts on the range, the borders of this range, and is there a possibility that 17,800 may break at some point?
Yeah, hi, very good afternoon. Well, if we see the data, then except that FIS figures, the other data does not seem to be much negative for the markets. In fact, the dollar index is at lower level, which is usually considered as positive for equities. And then even if you look at the global markets such as Dow Jones or Nasdaq, they have also seen a good pullback move from the support zone. But only thing is that FIS selling in the index futures have still continued, and they are still below that 50% long-short ratio mark, which indicates that more of their positions are on the short side. So I think unless we see no short covering start of any short covering move by FIS front, I think the markets would not be in a hurry to give a breakout on the either side. The consolidation that we have seen of late, where 17,770, 17,760 has been acting as a support, and the 20 EMA since 15th of December was the day when 20 EMA was broken, and it's almost exact a month now where the 20 EMA has not been taken out yet. So this consolidation is likely to continue in the short term unless we see no good short covering coming in by the FIs. So what traders should do, they should ideally play the range. They should not chase the markets on up move near the resistance zones, and rather look to buy.
I'm just going to interrupt you there because we have the Federal Bank numbers on the screen. So we're just going to take that really quick. The gross NPA has worsened marginally on an absolute basis. So let's see how that is on a percentage to loans. But the net profit as well as the NII, in fact, the NII has come in on a higher basis, on a year-on-year basis. So it's an over 20% growth that we've seen in the NII. The net NPA has reduced as a percentage to loans, which is coming at around 0.73% versus 0.78%. Net profit is higher than estimates. It's coming at around over 800 odd crores versus our pool of around 715 odd crores. So there's a strong growth which is coming both on the profit as well as the NII on a year-on-year basis for Federal Bank. Now, what the parameters are, what the slippages are, that's really going to tell us the full story about Federal. But as of now, it looks like it's a good set of numbers which is coming for Federal Bank. Remember that we already had data that they had done well in terms of deposit growth, etc. So this, what they report in terms of slippages, asset quality will be the real determinant in terms of how the stock would probably move. So as of now, NII, profit, which is a beat, gross NPA, net NPA seems to be largely stable this time for Federal Bank.
Okay, all right. So, of course, we'll get in some commentary and more analysis coming in from Abhishek as well, as in when we get more numbers on Federal Bank. The stock is higher by 0.4%. With that, we'll quickly slip into a short break. As we do that, here's an important information for our viewers. Don't miss out on the 19 must-have stocks for 2023. Subscribe to Money Control Pro to get the full list.
look.